Tuesday, the 25th of April, and we are on the FTSE 100. Just entered into a long position after this 8:25 a.m. engulfing candle. Now, the FTSE 100 this week so far has been pretty hectic. So on Sunday, after the French election results, the market made a large gap up, and then on Monday, it made a very, very strong bullish rally. So coming into the market today, well, the preference for me was with the market sitting up here early morning, chopping sideways. When I was doing my analysis, I would have preferred to have seen the market press higher in pre-market and then look for a short position up here. Up here is a good level of resistance, key level of resistance, and that was the preferred trade. However, what I was also looking at and what I went over with subscribers was this zone right here. This zone right here is really the only area where I was happy for both support and potential bullish positions and resistance and potential sell positions. So if the market is sitting above support and resistance area, it's testing it as support. If it's below it, it's testing it as resistance. I'd be looking for the sells or the buys. Now the market has set up into this area as support. We actually produced a pin bar at 8 AM. The market has then held at this 7264 daily support and resistance level. It's tried to break down a number of times and it has failed. We then got the engulfing candle at 825, and this is the one that triggered me into the trade. So what am I looking for from this trade? Well, as I've mentioned, my preference was to sell into the market, and I am still looking for potential sell positions moving forward on the FTSE 100 now after such a strong move up yesterday. Up at these levels, so the overnight highs, you can see where the market has created this base of resistance. If the market gets up into these levels, now because I am looking for something to come off of the FTSE, so my preference is those sell positions. Because of that, up into these levels, if I start to see little bits of rejection, I will close out partial profits on this trade. So I'll close out 75%, locking in profits, and then I will let the position run. And if it comes back down, I will likely get out on that remaining 25% at break even. You can see my stop is just sitting here, 7260.4, below the low of that engulfing candle. So what I'm going to do is I will pause the trade, pause the video, sorry, and I will turn it back on if the market begins to move one way or the other. I'll talk you through exactly what it is I'm looking at, exactly how I'm managing the trade and what I am doing. Okay, let's have a look at this trade so far. So the entry was 825, and what you can see is we have had a very, very sluggish morning. The market has pressed higher, but it's done it in a very, very slow way. We've been stepping up. The bears have been stepping in, stepping up. Bears have been coming in, stepping up, stepping back, stepping up. And then we got to these levels up here where the market began to pause. Just mark this in. So we pressed up. The market began to pause. Just didn't quite get up into that management area that I was looking at. Really these levels right here. And then we have had a pullback. Now there's a couple of different things that I'm looking at. So the first thing is the pullback. We had two relatively strong bearish candles. Now potentially what we are seeing is just a natural movement of the markets. We press higher, we pull back, and then we make a second attempt to press higher once again. However, we may also be seeing evidence that the bears are stronger, the bears are taking control of the market. These are the sort of things that are always going on when you're trading, and the things you have to be considering. For me, what I'm thinking about is the fact that this morning, my preference was to look for sell. So I'd rather have seen the market press up here, look for a sell position. Down here, I was happy to look for buys and sells, but the preference again was to look for resistance and sell positions after such a strong move up on the FTSE 100. So this trade that I'm in, it is not counter trend, but it's counter my overall analysis. Now it doesn't necessarily matter. I always let price action dictate what it is that I'm doing, but it is in the back of my mind. So if I start to see weakness, it's just giving me that clue that potentially it's time to get out of the trade. So what do I want to see? Well, I want to see this move up coming relatively quickly. I don't want to see strong bearish sentiment coming into this market once again. If we do see that, I will just come out of the trade. Break even, very small loss, very small profit. One of those options. So all I'm doing now is watching to see how the market reacts. I want to see that move up. Still looking to come into this management point. If we get up here, I will be closing partial profits, stop the break even, and letting the remainder of the trade run. So let's see how we get on. Okay guys, the market has reached that management point and I have closed out 75% of this trade. So now what I'm going to do is I'm going to bring my stop up to break even, protecting that remaining 25% of the position. So that means no matter what, I am finishing this trade in profit. Then what I'm going to do is set a limit order for just below 7,300, likely at 7,297 for the remaining 25% of this position. Now what that does is it protects me in the trade, as I've mentioned. I've already locked in profit. The remaining 25%, the worst that can happen is it can take me out at break even. Now, when I was talking about what I was looking at down here, this is what I do with live trades is I always record the trade that I take on the Tuesday. That means that I can't just simply cherry pick the trades that I'm showing you. And it also means that you're going to see the trades that work perfectly, the ones that stop me out, the ones that end up at break even, and the ones where I just exit too early. Now, the reason I do that is because it allows you to get a real world view of what trading is actually like. Now, when we were down here, there was the very real possibility that if we started to see bearish action, I would have exited this trade at break even or very small loss, because that's what my analysis had told me. Now, there was nothing to say that would have happened, and then the market would have reversed and came back up into the target area. That also happens. It's also very common. It's all part of trading. When you see a lot of trades where, all you're shown is the perfect trade. So the trades, oh, look, I made 1 to 8 risk to reward. Look at this trade I entered, and 30 seconds later I made all this profit. It's great. Yeah, it does happen in trading. Very often in trading, I'll take a trade early morning, a couple of minutes later, I'll be finished work for the day. But there's also a lot of days like this where you're grinding out the trades. There's also days where you're taking trades and they just don't work out perfectly. You can be in a trade for 4 or 5 hours, sitting at the screen, and then you get stopped at break even. It can be very frustrating, and it's all part of trading. When you realize that, though, it allows you to, first of all, accept it, and then expect it. And if you expect it, as long as you're following your trading rules, you come to realize that it's all just part of being a trader. There's nothing to worry about. It's not this very fast-paced, action-packed industry. Very often it's like this. It's very, very slow. I'm doing absolutely nothing, and then pulls back. I have to make a decision. Okay, what am I looking at? Well, potentially we're seeing the bears stepping back in. I want to be a little bit careful because of my analysis of looking for the sells. So what I'm going to do is if I see strong bearish price action once again, I'm going to come out of the trade. If not, I'll remain in the trade. That's exactly what happened. Stayed in the trade, closed out 75% of the position, and now the trade is protected. So what I'm going to do is I'm just going to let this trade run now. Now that it's the 75% is closed, the stop is at break even, and the limit order I'm going to set, I'm going to set the stop at break even, I'm going to set the limit order. It means I don't have to be at the computer for trading anymore. So what I'll do is I'll come back later on when this trade completes one way or the other, and then what I will do is I'll also take you through on the higher time frames what I was looking at in regard to this zone, and also where my analysis of the markets came from. So what I was looking at and what it was suggesting. We're back on the FTSE 100. We're just past 4 o'clock, so coming up toward the FTSE close. What we can see is where we closed 75% of the position out, the market has held at that level, came back down, taken the trade out at break even, and then for the rest of the trading day, it's just been bouncing between the support zone and that resistance area I identified from previous price action. It's one of the great things about closing out partial profits. If you are reaching a level where potentially the trade is likely to turn against you, you can still lock in your profits, and then with that 25% remaining position, or whatever it is you decide to leave running, you can even close out 50%, 80%, whatever it is you want. You can still look to run the position up to, it was 7,297 that I was aiming for. But what you've done is locked in profits, and you've taken the risk out of the trade. So as the trade came back down, it just took me out of break even, meaning I didn't lose any money on that portion of the trade. Okay, what I'm going to do now is jump up onto the daily time frame, and I'll just take you through the reasons why I was looking at this zone for today, and also show you this zone up here, which is the preferred area where I would have liked to have sold from. Okay, the daily time frame. This level right here is the area where I was happy to look for potential buy positions, and if we broke back down below, potential sell positions. Now, the preference was for those sell positions. You can see the market testing this area multiple times in the past. A break back down below here after such a strong move up. So first of all, we gapped up after the French election results. We then had a very strong upward move on Monday. For me, a break back down below these levels would suggest the bearish sentiment entering the market once again, and potentially we would see the market coming back down toward this whole section of price action down here, which is where the market closed on Friday. Now, I was also looking up at this key level right here. Now, this was really my preference for today. What we can see here is the market testing this level as resistance. We then break above and come back down and hold at it as support. It's a strong level on the FTSE 100. As we come forward, you can see the test, spike down testing, the candle testing with a spike down here, and then here the candle comes down and closes on the level. Became a good area if we had seen a press up this morning to look for those sell positions, people taking profits after such a very strong move up, and the bears stepping back into the market. But we didn't see that, and instead we got the buy position here. For me, it was just a little bit against the analysis, so I was happy to look at that level of resistance for partial profits, and then take the other 25%, look to run profits, and that ended up getting closed out at break even. Okay guys, as always, I hope that was helpful. I hope you've all had a great trading week. So far, I'm James Orr, and thank you.